Good evening. This is the Elliott Wave update for the S&P 500 for Tuesday, March 15th, 2022. A quite interesting and amazing day today in the markets. All of the equity markets saw extremely strong buying as what I believe was just a massive effort to cover shorts across the board. And as I had started yesterday, I mentioned in the VXX that the Barclays is discontinuing this ETN. And by discontinuing it, of course, that means they've got to go and remove everything. They've got to get out of all these positions. And this volatility index, of course, is used a lot because it's truly destined to go to zero. Each week it goes to zero. So we now have seen in this month, this week's cycle, which does expire on Friday, was trading at a 340% volatility and came down again at the end of the day. It reached a high of 41.65 today. It was trading between 33 and 36 for most of the day. It was right at the end of the day that they marked it down, which is what they do. Volatility goes down because it loses volatility overnight. But each day they're coming back in and they're having to jack it back up because they've got to get these positions closed. Now, just to show you, this is where it's trading, 28. This particular month or week has March 70 calls. They're offered at 28, 25-cent bid. They are $40 plus out of the money, 250% volatility. So I think that this short covering and just getting positions squared in this VXX has caused an additional massive short covering in the broader market. Now that's my own take. I have no basis, because what many are talking about is like, well, you know, crude oil came down today and it was down over $8. And so, you know, that's going to put another spin on inflation. I'm like, what? So I think it's a short covering plus just trying to build into the market that they're not going to raise the rates that much tomorrow. So again, we're playing this game. And when it happens in markets today, which are totally electronic, everybody gets to push a button. They basically are not necessarily putting in a button and bidding. When you need to cover or you need 50 or 100 futures, you're buying at the market. And this thing was flipping and flying and basically just push up, straight up, as large baskets of stock hit across the spectrum. Now, we have so much going on right now that this rally in the equity markets, it took me by surprise. Now, the markets did, including the S&P, go down and put in a slight new low below what we had finished at yesterday. And so that was in expectations. And I even had discussed that it might just happen overnight in the Globex session. And then likely when we get up and we start trading, we'll continue to go lower if that was the case. Well, this happened at 2 o'clock in the morning Pacific Daylight Time. And that was it. It hit that low and they just took off. And they bought and they bought and they bought. I'm going to just open this up because I really got to show this. They just bought and they bought and they bought. And they did not, come on. They did not stop. 1, 2, 3, 4, 5, 6, 7, 8. So this is from 2 o'clock, 8 hours before we got a 1 down bar. and then 2 more hours of up. That was today. So this market went from 41.30 to 42.63 today. It was amazing. It was an intense up day. But here's the good news. By being able to keep a mindset together and being able to keep your focus on what is directly happening in front of you and using the volatility somewhat to your advantage, but understanding that the market is going up. We broke above, this is before we even got in. This is where we got in. This is now we're trading. And you can see they broke above the 50 and then it accelerated. They broke above these other ones and accelerated. It got up and broke above the 200, the hourly 200, and accelerated, and now has closed above that level. This does let us know that the S&P likely has a little bit more to go. Now, prior, I had put this labeling 1, 2, and then I was looking for a little bit deeper third. I'm moving that all down. I moved this, so this is really working out to be more than just, you know, I can get 1, 2, 3, 4, 5, and I'm putting the subminute wave 1 down here. Now that kind of reminds me, because I did the same thing with the minute wave 1 prior, where it was just like, oh wow, this is going too high, and for a wave 4, if you remember, and I was like, So basically, if I was to count this 1, 2, and this is third, I'd be looking for a small 4. Well, that just got blown out of the water because it zipped above what was labeled as wave 1. So now we have additional room, and the market cannot break above 4,325. If it does, it invalidates this count. And let me just fill in that blank. If it invalidates this downside count, it's just we're going back over to the alternate view, which then suggests that, come on, this wave 2 is not complete. And that we got an ABC, and then maybe this is an X, and then we get another, we get a C wave, or an ABC up. Or this is an ABC A, ABC B, and now we're getting a C wave up. And if it is, it certainly can break that level, and we were looking for these upper levels. Now, if I just open my chart up, go to the 4-hour chart, and let's take another look at that same pattern. So that would just be if this minute 2 is still in progress. But we could actually have to go out to this one. And if the minor 2 could still be in progress, which would be pretty big. But again, if this all breaks, then if we're changing this, if it comes above 43.25, we can do that tomorrow for all we know. And then I'm moving the wave 2, and the C wave would stay as the wave A, and this would be wave B, and now we're looking for a C wave up. The C wave up cannot, in that case, then go above 44.18 or 44.19. Break there tells us that it's the minor wave 2 is still in force. But otherwise, if the market holds below this level, finishes this move, and then turns, and this is the gig, if it finishes a subminute wave 2 still within the parameters that we've now given, cannot break above 43.25. If it does not, and it turns, this is what I would be expecting. And I'm not kidding about the intensity. This thing has to move immediately and slide immediately, quickly, forcefully, back down below 41.30. No holds barred. Boom. And so therefore, in my vision, in my view, it is going to be news driven. Now, whether that's something coming out of the Ukraine, or something coming out of the government, or something coming out of the Fed. we've got this whole built-in crap about bullishness and gee, maybe the interest rates aren't, you know, because crude's coming off. Really, when do you think it's going to lower at your house by the gas pump? When do you think that fuel that puts the planes in and the trucks and the trains to get our goods from A to B is going to come down so that producers and grocery stores and everybody else is not having to jack up those prices? It is not crude oil alone. It is the balance of the commodities. It is the balance of wage inflation. It's just so much more complicated. So to be buying this on the basis that crude oil sold off, I think is a folly, and somebody's believing something they shouldn't. Now, back to the picture. So if they come out and they raise it only 1/4 point and the market will love it, I expect it to shoot straight up. Like they did, but just shoot straight up. So if not, I do think we're still going to move higher early, unlikely overnight. And then again, they might hold it, and we'll hold it there all day tomorrow until 2 p.m. Eastern, and then we get the results of the Fed. I think it's going to be hairy no matter what. Expect a reaction no matter what, up or down. We're going one way or the other. If they raise it 52.75 to a full point, this market will just collapse on its face. If they only do 1/4, they're going to be like Yahoo Mountain Dew. We've still got cheap money, and they're just going to buy it. That's just my perception. Whether it's truth, that's the perception of what I believe the market will do. Okay, so that's our scenario. We will have a pretty wild day tomorrow. It may be slow up to that point. Somehow, I don't think so, because there'll be a lot of posturing in its place. But we did see a whole bunch of money come flying back into this market. They had to have it. So for tomorrow, I am expecting at least 42.67, if not up into these areas, 42.93, maybe even close to 4,300. It cannot surpass 43.25. If it does, this count is negated. The minute wave 2 is still in force, and then we're looking for these upper levels. And then it can't break above 44.18. Above 44.18 puts us into a very strange position where minor wave 2 is still in force. And trust me, all of this will come to pass. But these are our possibilities right now. So, and actually, even if it goes up, that this one is still in force, and this is just ABCA, ABCB, then we're going up in a C wave to finish this correction, and there's still a major collapse in the market waiting to occur. So to me, I'm just looking at this going, I don't find anything bullish enough with my count or with what the market is doing to suggest that this is all done. All of this downside is done. We're okay, everything's fine. Everything is moving back to normal. I just don't see it. It's not lined up. It's not correct. But if that's what the market does, then I think that they might just shift this around and try to get this thing back to 4,600, 4,500 for sure. That is all going to be a possibility, but a lot of has to come in, and a lot of givens have to be known to give enough fuel for that. Okay, for tomorrow alone, expect additional upside. The reaction coming out of that Fed meeting is going to be swift, and it's going to be hard. Either way, it's going to be hard up or hard down. And that is what my belief is. And so either we're going to start down in a third wave, or we're going to head up to complete a second wave. So trust the moving averages, trust, they really do fall in line. And we really do get the acceleration when they break in both directions. And I keep telling you that, it's true. They break here, go ahead and buy it. You're gonna get some movement out of it. You're gonna get it. And you may have to be patient, but you should get your moves. Today, the trading actually wasn't all that bad. It was not as difficult as people would think to make money. As long as you can keep your focus and your mindset together to trade what is in front of you. When you've got that under control, it becomes much easier. It truly, truly does. Then you're not fighting the long. You're not fighting the short. You're trading what's in front of you. You're going with the market and not against the market. Makes life a lot easier. I'm going to leave it right there. Our next update will be on Wednesday, the 16th.